Good morning, good evening, good afternoon, depending on where you are in this world. This is Hajani, and I want to share with you something about the interest rates that could be very dangerous, and you may want to pay attention. Now, all of this is coming from the figment of my imagination, from my monkey macaroni brain, but it's what I call technical analysis. The 30-year Treasury yield has been on a 40-year plus downtrend in a train crash calamity to zero on a zero interest rate policy managed by Bernanke, Greenspan, Yellen, Powell, you name the central bankers and the treasurers as well. And with ferocity, it broke above the trend line. And this is telling me that there's a change going on from down to up in the interest yield of the 30-year Treasury bonds for the U.S. And no one's really talking about this. At least I haven't seen it. However, this is extremely important in that rates are not going to go back to zero, probably more. It might take a dip, but rise and rise. Forget the timeline. Ignore the timeline. If I put in the timeline, you just won't see this. So this could be decades. Just as it took decades for the downtrend, the uptrend could take decades. If we do an inverse head and shoulders on a potential basis and plot out the target, that's 25.71%. And that, if that happens, that means that the Treasury bonds will be shunned. No one will want it, because why would someone not buy a bond of a specific country or a company? You have no faith in their financial stability. And the biggest destroyer of a national financial stability is when the interest payment per year exceeds the annual tax receipts. And not only just exceed, but exceed in multiples. So let's say, just for easy math, annual tax receipts are, let's say, $50 trillion, just for fun. If the debt paid per year becomes $100 trillion, just for funny math, the desirability of the bonds of that nation plummets, and thereby the rate, or the yield rather, increases. The rate will always stay the same, but the yield goes up and down depending on the pricing of the bond, which is derived based on the supply and demand for that bond. So let's say at this point, in 20 years, 30, I don't know what the time will be, but we actually get an inverse head and shoulders and it goes above this point, let's say above 5%. But we now get to maybe 13%. At which point, let's say interest payment becomes, just for fun, 4x national annual tax receipt collection. That's really bad. So what are they going to try to do? Well, one of the things they will try to do is, the government has the power of taxation. And what they'll do is they'll increase the taxes to reduce the debt to tax revenue ratio. Yeah, and that'll drive the rate low, and many will say, it's finished, it's done, we're going to go back to normal rates of 3% or whatever, blah, blah, blah. But what that does is, let's say, in order to do that, okay, in order to make it from 5 to, let's say, 2x, okay, so instead of owing 5 times the tax collection receipt, you want to drive it down to 2 times, you collect more taxes, and let's say the minimum tax bracket goes to 50%. And for the filthy rich, the minimum tax bracket goes to 95%. Ronald Reagan used to complain about having to pay 90% taxes, which is why I think he became a Republican. Okay, so what will that do to the population? It'll piss everybody off. There's a study out there saying monarchs got their heads chopped off, usually at around 48% minimum tax bracket. And that will not exclude the USA government either. And while it'll give temporary relief, the extreme taxation will take money out of the economy, away from innovation, away from growth, and just exacerbate what would be a death spiral, and increase the rates to levels that will be jaw-dropping. So, what do? Well, I would like to recommend a new term for HODL, and it's called Forever HODL. And this means that, and this new term will be the Forever HODL. Let's make it minimum of 1 BTC. Because there needs to be an alternative, a viable alternative that has to come about if this ever happens. And that forever HODL, you do not leave on an exchange. You leave it in a cold wallet. You own your own keys. You never leave it on an exchange. Why? They can confiscate it. I can imagine it being, Bitcoin being, let's say, illegalized or confiscated or what have you. Who knows? I can just imagine the mass migration of people out of USA to Bitcoin-friendly countries, etc., what have you. So while this is a fantasy out of my monkey brain macaroni, entertaining, it really has still probabilistic outcomes because of the fact of this ferocious upside upbreak of a 40-year plus downtrend, and this is not for the faint of heart to ignore. Members get this type of assessment frequently with daily videos of Bitcoin analysis. Consider joining. Have a good day.